What's up, YouTube? Silver Dragons here, and today we're going to be looking at this article over here on Kitco News. It was just published this month, and it was actually sent to me by a family member, but it's a really interesting one. So the headline is Gold Price at $10K, Silver at $500 due to a decade of shortage, says Gehring and Rosenzweig. Now, if you don't know who they are, they're an investment service, I guess a research firm. They mostly look at natural resources and contrarian investments. And they're predicting $10K gold, $500 silver. So that would be absolutely crazy to see. I mean, if silver goes to $500, what are we in, hyperinflation at that point? You know, what's the cost of everything else going to be? So something to think about. Now, is this just them putting out a crazy prediction just to get, a few clicks, to get people to actually, take a look at them? Or does this have any merit to it? So we're going to go over this article. I mean, I cannot foresee silver going to $500 this decade. It would be absolute insanity. But anyway, let's dive in, and I'll give you my thoughts along the way here. So it starts off by saying, this will be a decade of shortage defined by high inflation and a failed attempt to raise rates. The perfect combo to trigger a massive rally in gold, says Gehring and Rosenzweig Associates, managing partner Leah Gehring. Next year, inflation could already be pushing 9%, and it could get a lot worse, Gehring told Kitco News in an interview. I'm going to stop right there for a second. So they're saying that basically the reason silver and gold are going to go so high is because of inflation and the government trying to raise rates. So what's going to happen is it's basically going to crash the markets. Everyone's going to go flocking to gold and silver. And, with inflation already being there, especially if it increases to 9% next year, if it keeps on increasing after that, we could see gold and silver go a lot higher. So that would be really like the only safe haven people could flock to. But anyway, let's keep going on here. So it says, we're getting closer to the explosion of gold prices to the upside. I'm a big believer that inflation is not going away. It's going to continue to be a problem. We could be looking at a black swan event in inflation. It could be an oil shock, natural gas shock, or agricultural shock, Gehring said. Federal Reserve Chair Jerome Powell already shocked the markets this week by dropping the phrase that inflation is transitory and stating that the U.S. Central Bank will be discussing accelerating the pace of tapering at the upcoming December meeting. So they're saying he dropped the phrase, right? So inflation is transitory. We're not saying that anymore. We know it's not transitory. Obviously, many of us already know that. But once you hear it from Federal Reserve Chair Jerome Powell, then we can finally believe it, okay? Whatever Jerome Powell says, that's the truth. And, we need to listen to him. So ridiculous. But yeah, so I guess if they do accelerate the pace of tapering, I think it was supposed to go until July or August of next year. But if they taper down the Fed's asset purchases quicker than that, then they could start raising rates sooner. We could have a market crash sooner. So anyway, let's keep on going down here. It says, an inflationary black swan event could kickstart that inflationary psychology, which has been missing despite annual U.S. inflation running hot at 6.2%. It is going to force the Fed to raise rates. The central bank will start, but that will create such havoc that the Fed will have to stop. In response, gold will first pull back, but that will be the final retreat before the massive gold bull market, Gehring described. So basically, they're saying when the rates start going up, then they're going to have to stop because, everything's going to start crashing and gold will go down at first. Now, I agree with that. I think if we do have a market crash, we probably will see gold and silver both go down initially. Now, that happened back in 2020. We've seen that before in the past, back in 2008, etc. But once it dips down, that's kind of like your last chance there to buy in. It's that liquidity crisis, right? Everyone needs cash. And so, they sell their gold initially, but that is the time to buy in. Now, can you be buying in right now? Absolutely. When gold does dip down, then the premiums on physical gold are probably going to go up. So we're not really going to see a dip in physical gold prices or physical silver prices. In fact, those might go up at that point. But, the paper markets, we would see that dip. Now they go on to say there are too many similarities between now and the late 60s and early 70s, and they cannot be ignored. Back then, inflation was going up about 5 to 6% per year, the same as now. And then in 1973, there was the Black Swan event, the oil embargo. Oil went from $4 a barrel up to $15 a barrel, literally overnight. And that triggered a huge surge of inflationary psychology, and the Fed raised rates aggressively. Gold spent the next 2 years going down, bottoming in 1975, Gehring said. This time around, however, the Fed will have to give up on raising rates because it will be too painful for everyone. And that would be the perfect scenario for gold, Gehring added. Once the precious metal bottoms from the Fed's tightening action, it will begin its massive bull market. So, that could happen, but honestly, when they're saying it could go up to $10,000 and silver go up to $500, I'm like, that's kind of where I start to pull back and say, really, could it go that high? We haven't even seen $50 silver yet this time around, or $100 silver. Back in the 80s, silver did go up to about $100 an ounce if you adjust for inflation. But let's get to $100 silver before we start talking about $500 silver. But anyway, so they go on here. They say when Fed Chair Jerome Powell began his first term, he tried to raise rates, which backfired in the Treasury market. That's why I think Powell will have to give up on raising rates, just like he did in October of 2018. And once he gives up, the great bull market in gold starts, Gehring pointed out. All right, so here we go. Now we're going to talk about $10,000 gold and $500 silver. How big of a bull market will it be? Gehring is expecting gold to reach $10,000 an ounce by the end of the decade, and for silver to eventually catch up and trade around $500 an ounce. By 2028, gold could be over $10,000. If gold is over $10,000 and we go back to the 20-to-1 gold-silver ratio, that's $500 silver, he said. It will be the decade of shortages, and everyone's going to get poorer except for the people that own physical gold and silver. Silver is another quintessential inflationary metal to buy and hold during the next decade. I'm convinced that in this bull market, there's going to be another corner attempt at the silver market, Gehring said. So he's basically saying that, gold is going to explode up to $10,000 an ounce. And what is that, a 6x gain from where we are right now, something like that. And then if we go back to the 20-to-1 gold-silver ratio, we could see $500 silver. Now, I think if something like this were to happen, gold would probably go up first, and then silver, tag along Timmy, would eventually catch up. So, even if gold did get to $10,000 by 2028, silver might take another year or two to really catch up there. So it's also interesting that he thinks there's going to be another attempt to corner the silver market. I think we would need to see a lot of the manipulation end in the silver market specifically before people would try and corner it, because there's big banks out there. JP Morgan, they got a lot of cash. They could really try and force the price down, which they've done in the past. And so, are we talking about like a silver squeeze, a bunch of individuals trying to buy physical silver, and that's the attempt to corner the silver market? Or, who's actually trying to corner the silver market? That's what I'm curious about. Inflation will get a lot worse during this decade of shortages, and the underinvestment in the resource sector will play a big role. When we look back on this decade and ask what happened, it's going to be looked upon as the decade of shortage. It's going to be a shortage of everything. Over the last 10 years, we've radically underinvested in our resource spaces relative to demand. Look at what's happening with Exxon and Chevron and the ESG concerns. They are not talking about replacing their resource base, Gehring said. This underinvestment in the resource sector will manifest itself, and that is going to be highly inflationary, the Gehring and Rosenzweig manager partner said. This year, inflation will accelerate from under 3% to over 6%. At some point in 2022, we could approach 9%, he noted. So I guess that's something to look out for. If we do hit 9% inflation, then this article has a little bit more credibility. But still, I feel like $10,000 gold and $500 silver. I mean, that just seems crazy right now. Can you imagine paying $500 for 1 ounce of silver? My goodness. All right, let's finish out here. It says, and the one key metric to watch is the bond market, which has so far largely dismissed the rising price pressures. We have inflation now, but we don't have inflation psychology. And that's what the bond market is saying to. However, what happens if the bond market changes its mind? We could see massive panic selling, and that's going to be a big problem for equities. In 2022, the bond market could finally incorporate inflationary expectations, Gehring described. And we do have one last part to the article here. It says, during the last month of 2021, gold is still in its corrective phase after hitting new record highs last year. But the long-term investors have been using this opportunity to buy. Gold hasn't been the place to be for performance reasons this year. And I think that performance discrepancy will continue for another 6 months. But for people that are looking to buy gold for the long term, they are buying now. Gold stocks too. They are the cheapest they've ever been. Another big winner for next year will be the agriculture sector, especially fertilizer stocks, according to Gehring. It is interesting too that they say gold hasn't been the place to be for performance reasons. And they're right. Gold went down in 2021. At the end of 2020, gold was higher than it is at this moment in time. And they're saying that for another 6 months, they don't really think gold is going to take off. And, the Fed isn't supposed to start raising rates for at least another 6 months. So we'll see what happens with all of that. But, my final thoughts on this article, I feel like it is extremely bullish. I think that we would kind of be in sort of hyperinflation at that point. I mean, 9% inflation, that's not hyperinflation yet. But if we see silver at $500 an ounce, that would be crazy. It would be absolute insanity. I'm buying physical gold. I'm buying physical silver. Do I think it's going to go that high? Absolutely not. I don't. If silver goes to $100, I would be very surprised. But that being the case, if we do have another market crash and people flock to precious metals, it is certainly possible. Also with inflation and hyperinflation, then yeah, clearly it's possible we could see silver go to $1,000 an ounce, in hyperinflation. How low can the dollar go, right? But anyway, a very interesting article. What are your thoughts on it? Feel free to leave a comment down below in the comment section. And I do want to say a massive thank you for watching my video, and I'll see you all in the next one. Silver Dragons out.